All right. So one of the things that came to my attention was that we've put out a fair amount of content. We've shown trade reviews. We've done live streams. We've done live streams on YouTube. Every Friday is a free Friday, so we're on the free side of our server. Anybody and everybody is welcome to join. We trade live there on Fridays every week. Start prep about 9, 10, 9:15, and then trade the morning session. Try to make Fridays a little bit short and sweet. Want to be finished and go enjoy the day, but nonetheless, that's the thing. So with all that being said, there's a fair amount of videos that show or highlight one aspect of trading or one approach or one piece of the puzzle that we lean on to make either a trade plan or to execute. So what I wanted to do is either through this video or possibly a series of videos, just walk through the way that I take all the spices and put them in the cake. And I think the cake being the metaphor for a trading approach, both from a structural daily plan standpoint and from an execution standpoint. And and just kind of lay it out like lay it all out there for the folks that are around the room or trade with me every day. This is obviously nothing new, but I thought this would help clarify for folks who have never been around for any of that. Like, what is it that he is looking at every day, and what are the main tenets of your trading approach? So the first thing that I look at every morning when I sit down at the table is the weekly volume profiles. Okay. Main reason is context, right? Like the volume profiles from a weekly standpoint are going to give us the big picture context. So, for instance, what am I looking for in this? Right. What I'm looking for value that overlaps. So we see a long stretch of overlapping value here. 1 week, the value is blue, overlaps the next, overlaps the next, all the way across through here. So we have what then becomes a balance area. There are videos that we've done on value and balance. I'm not going to spend a lot of time on it, but it's something I reference every day. And the big things, there's basically 4 levels that come, or 5 levels that you get from value and balance, right? You're going to have value area low for any days that the value overlap, or in this case, any week that overlaps the next day. When you get to a day or a week like this week, then you have this week, which was 2 weeks ago. This value does not overlap with this value. So this now becomes a point of interest, and it becomes pretty important. Why does it become pretty important? Because it's now an island week. Okay. Now again, we have videos on island days. We have videos on island weeks. I know we have videos on the idea of a concept of an island, no overlapping value, and what happens around and with those. But it can be looked at as a potential break from balance, obviously, and a break from value, right? So all of this value is accepted and laying over each other nicely. And then you have this week that goes, no, all the values down here. So the main areas you have is you're going to have a value area low, and that's going to be the lowest point the lowest point of value of all the overlapping days. And then you're going to have a value area high, which is the highest point of value of all the overlapping days. And you're going to have a mid of value, which is the middle of all the overlapping days. And this measuring of this stops on this day, right? But we extend it out into the future so that we can see how and if we interact with it. The next key levels that you're going to have is going to be balance area high. So the highest high of the entire range, not just of value, but the highest high of all the overlapping. And then you're going to have a balance area low, which is going to be the lowest low of this. So every day I look at this to get oriented as to where we are and what's going on. All right, we got some old spots here. They're just hanging out. We'll drag erase those real quick. The other kind of key spots that I'll reference from this will obviously be the low of the island day, the high of the island day, the value of the island day, and the island day point of control, which is probably like the key one, right? I'll use those potentially as targets either for trade entries or runners. I'll use those for contextual awareness. For instance, like if we're trading down into the low of this day and we trade below it, then I would want to see us hold below and continue. Or if we regain, and I'll have really strict, really tight risk around those trades. The worst thing is to get short a low and then hang on and hope as it if it comes back against you, right? Especially from a larger context. So um, I'll be very, very tight with that, but that's like those are places that trades can originate or terminate. Any of these kind of key spots. Prior week, so that's balance. It takes technically I like to see 3 weeks of overlapping value to kind of start measuring off. So like right now we have 2 weeks of overlapping value. And then this current week we're trading above value currently from last week. The low-ish of today, as of now, the 29th, tested into value from last week and currently has tapered off and at this moment has rejected. And we're trading back above the high of the prior week. So we have volume point of control from this prior week hanging out down here. Could be a great POI for news events coming up. Could also be a great target if you do get into a great short. You see the idea. So I'm always referencing these to keep them in mind. Like 902 today was just kind of a key spot. Now you can look at a chart from the 29th and see how we interacted around 902. You know, as soon as we opened this morning, we traded down, and then we just, when we came back inside last week's range, the pace to the downside really picked up. Anyways, so every day I'm looking at this, right? That's piece one, value, just value, and balance area high and low from a volume perspective. I'm going to also look at low volume nodes, high volume nodes, and edges, right? Edges and ledges, right? So what do I mean by high volume and low volume? Okay, so like a primary low volume area, like right there. See this inset of volume? It's going to be a pretty key spot, right? If we trade back down to here, we want to see, do we accept or not here? Also, you have like this distribution here, and it's like so in this area, but I definitely think I would want to pay attention right around here, right? This 50s to 60s where we have this low volume, kind of a jet back out, and another like low volume. So this little spot would be just an area to pay attention. I'm not going to pull the trigger on that. Just no line on the chart, almost no line on the chart is a trigger pull, just an immediate entry. But it will kind of get me leaning up in the chair, paying attention to where we are in the day, what time is it, what ranges have we put in around that or up to that. That could give me some indication. So I'm always referencing the MGI stuff, balance area high, value area high, balance area low, value area low, point of control, previous week's high, possibly previous week's low, the low of an island day, value area low and high of an island day, the high of an island day, point of control of an island day. Those are all things you just need to have back of your mind, especially when you plan. So I'll look at that and I'll have a couple of spots off of the weekly chart. Then I'll go to a daily chart, right? And this is when I'll pull out TPO, which is time price opportunity. Again, if you're not familiar with that, plenty of people have done videos about it. Basically, every letter, every block, I just have them as blocks. You could have them as letters, but every block that's created gives you is 30 minutes of time, which is a great middle of the road measure of what's going on in the market. Like 30 minutes is a great chunk. And so I will mark the same type of stuff on a daily profile as I will on a weekly profile. meaning days where value overlaps with the next, I'll mark them off as a small balance. A lot of times I like to see, I really like to see 3 days. So like this isn't as important to me, this balance area and this balance area, not nearly as important to me as like this balance area. I'm also looking at RTH only for this. Now, excuse me, coming into the day, we had pizza for dinner, so rough. Coming into the day, I will have the current overnight session will print, and I will look at value area high, value area low, primary LVNs, high and low of overnight session, but not for detail on entries so much as just like bulk contextual awareness. I'll pay attention to single prints on the weekly and on the daily profile. Again, not that I'm pulling a trigger on a trade when we hit a single print. A lot of times will use those kind of things as targets. If I get into a trade in the direction of single prints, so say I get into a trade going this way, I want to go attack the single prints. If you're not familiar with single prints, we did a video. At least we did it. We covered in a video what is a single print, how is it different from a fair value gap, what is similar about them, what's different about them. Go watch that. It's somewhere on the channel. But again, I'm referencing how we interact with balance area low from like a larger distribution like this. So this is balance area low as well as value area low. Why? Because we have value, overlapping value, overlapping value, overlapping value that came all the way down here. So this is value area low, balance area low. It's a key spot. So 41.75, key spot, right where we closed today, roughly. Okay, overnight traded down below, back in. A lot of times when we trade back inside balance area low, we're looking to trade to value area low. Well, it just so happens that value area low and balance area low are effectively the same price. So then what do we look for? Then we start to look for value area mid, right? Or point of control of the day that finally broke away, right? However you want to look at that. So this day from a TPO perspective as well, these charts, these balance areas on here are not volume related. They're TPO, they're time related. How much time do we spend? Where do we spend 70% of our time? So this day we spent 70% of our time here. It's gray. It doesn't overlap with this, which separates this from this. So then where's point of control for this day? Where's point of control for this value? Could zoom in to find it. But those would be things that I would be targeting as we came back in, right? And then value area high for this is all the way up here, 425 half. From a volume perspective and a TPO perspective, it's like 408. So like 410 to 420 is this value area high. Anyways, I will reference all of those as targets or things to give perspective. So we covered a setup that happens very rarely, but does happen sometimes, where we gap above an island day. There's a video on that from the other day. Those are the kind of setups, they don't happen often, but this chart will kind of clue you into like, oh, hey, if your other modes of work give you an opportunity or seem to be lining up, and then you have this daily kind of structural opportunity as well, it can make for, like Friday was, we were long. It was kind of an easy, like hands off, buy it and scale. Like the whole day was just managing scales. It was great. This past Friday. So I will pull balance area highs, lows, single prints, value, volume, all of that from here as well. And a lot of times I'll use like this notebook right here because I don't want to be switching between charts all day. And some of the numbers I'll remember and some of the numbers I won't. And so I'll just write stuff down in this book that I keep by the desk. I have two of them, that one and another one. And I'll just write down key spots and I'll order them like highest to lowest. And then I'll pick out something to use as a pivot and a lot of times that'll be related to either time, a specific time where we traded, or like we will have, so sometimes for an example, sometimes we will have this, which a lot of folks in the room are aware of this. kind of set up. So let's say that this was the overnight session. It's not, but let's say that it was, and let's say that um, this was the prior day, and this was overnight, and let's say that this was the start of our day. One of the things that I often will do is I'll look. We have this value area high here, and this value area high here, right? So we have value area high, value area high. From a volume standpoint, that will become kind of my pivot. I mean, and it works going into overnight as well, but I'm just saying, like, I'll just look at that as in a general sense and say, if we're holding above the prior two value area highs, I want to be a part of the long trade until a setup from a larger time frame intraday maybe puts me on the offer side. And we'll talk about that um, here in a minute. But those are the things I reference. Then the last thing I reference for prep, and I would say maybe not the most important, but one of the more important, and this is going to look very different, is I'll reference this chart over here that I don't even keep it on this main screen, so you can't see it. And this is my daily chart. Okay, it's a little bit different than what most people would think of. It's not RTH only. It starts at 2:30 a.m. and it goes until the close of the market. And so this will give me bigger picture, like not daily picture, but like that more granular view. I want to see what the Euro session has done into the RTH session AM into the RTH session PM. So this chart runs from 2:30 a.m. Eastern time to 4 o'clock p.m. Eastern time. And this kind of paints the picture for me of like when everybody's out playing during this time, right? I mean, all guns a blazing, right? This is where I'll pull like key liquidity. So you can see this 968 half. We've been talking about this for a while. This 968 half and this 88, I believe it's 88. Yeah. These are two spots that we want to see what the bulls do when we interact there, because these are potential areas of reversal for me, right? Now, that does not mean that when we trade 88, I'm just going to snap into a short. We can talk in another video about how I'll take executions. But I can say that, like, for me, these 2:30 a.m. to close really kind of paints a picture of what's going on. Really paints a picture for me of what to be interested in. And then I'll take that down one more notch, okay? And I'll take that down to even smaller. So then I'll look inside of that. Don't let this like throw you off too much. Okay, inside of that, right? I will mark the swing high and low from a 90-minute standpoint. So from 2:30 a.m. to the close, I'll monitor from 2:30 to 7. I'll monitor from 7 to 11:30 and then 11:30 to close. You can see that creates 3 90-minute candles, 3 90-minute candles, 3 90-minute candles. I don't care how you organize it. You can do whatever you want. This is incredibly helpful for me. Okay. Now there's some other modes of work going on this chart. Like you see this red box. This is a move to the high. There's other videos we've done about market structure. I'm not going to get into all of that. But what I will say is I'll use this. I'll pull leg to leg profiles at times. Okay. And I'll keep this 20-day volume profile. I'll keep monthly VWAP on here, current month VWAP, but it's only looking at 2:30 a.m. to the close at 4 p.m. So white, orange, blue. It's the way I organize it for myself. Okay. And inside of the weekly, inside of the daily, and inside of those, inside of that 2:30 to close, I'll also monitor the 90-minute sections of time. And we have a video on time where we organize it a little differently. That, everything's a work in progress. I think this really catches the heart of what I want to see. So, for instance, I'll watch the 90-minute swing high. So, like this 90-minute swing high, 90-minute swing high, 90-minute swing low. As we trade below them, I'll gauge interest. As we trade below, as we trade back in, vice versa. So there becomes these opportunities to really catch a smooth entry where maybe a lot of other people get offsides by being aware of the ranges of these time frames. And that's what I'll watch intraday for local targets. So, for instance, um, like this target right here, which came in 8:30 into the open, like we never, made it all the way back up there. We did make a nice move down and back up. We, traded below this, traded back in. To me, trading below one of these swings and getting back inside puts me on watch for a bullish rotation. How far that rotation goes and what that rotation achieves will either keep me on bid or put me on offer. So I look at this every day coming in, and let's say that the market was, well, here you go, like old range high, 42.75 right here. Like as soon as we came back inside that, technically that's bearish. But I know that we have some support lurking down here. So there is a bearish trade to be had, but I also have to watch it. Have to watch how we interact with prior swing lows from a 90-minute standpoint. And that really allows for me to be a little more nimble. So I can be in a short, take profit, and then as we rotate back inside this range, that can allow me the freedom, which is a big part of trading, to join for that rotation to the other side. Because no matter what anyone says, no one really knows what for sure is going to happen. We have a video on this as well. There's a difference in knowing what is going to happen and knowing where something should happen. And that's really what a lot of my work is supposed to do, is point me in the direction of where something will happen. It's up to, again, entry methods and such to pull the trigger and infer that data. But for me, there's a measure of, observation, right? We observe the market split up the data into multiple modes. We look at the weekly data, we look at the daily data, we look at the abbreviated days data, we look at 90-minute data. Then we look at, and then from all of that, we interpret that. Like what is the chart telling me? What is our activity around swing highs and swing lows telling me? And then we apply that information by taking trade entries. So the better job we do in observing the market, the easier it is to interpret what is happening, and then execution just becomes a byproduct. And that's something I feel strongly about. So we observe the market, we interpret the market, and then we apply that information to our trading. Last piece of this video, and then we'll stop, and I'll do another video in a couple days or something. This probably makes some of you like, your skin crawl to see all these lines. So these lines developed as the day went. I didn't start with all these lines on. Here's where I start every day, right? All right, check it out. And this is the last thing I do, and we'll do this up to 9:30. So we'll just look at this. This is all the information I had coming into today, right? What information is this? All right. This is a 1-minute chart showing me the euro range from 65 up to 914. Is showing me the high of the afternoon range from Friday. If you scroll all the way over here, right? 901. It's showing me the high of the the high of the afternoon, or the high of the morning range was on here until I pulled it off after we traded. But normally I'll have that. And then if we have a range that we haven't traded into yet, I'll have that on there. Right? So like we have a 90-minute range here. Remember back to the 90-minute chart from before. This is just 90-minute swing low, 90-minute swing high. 90-minute swing high, 90-minute swing low, 90-minute swing high, swing low, and then 30-minute highs and lows of the little gray lines. So I want to keep that information in front of me. So I'll draw those lines, right? Oh, we don't want to get into the day yet. We're just doing prep work. So then I'll have up to 9:15 drawn when we come in. And I'll have range high, range low from euro. I'll have current range low and high from the morning so far, from 7 to 8:30. That'll be a key range for me. And then the 30-minute swing highs and lows. And what my attention was drawn to today was this cluster of 30-minute lows that we hadn't traded below, right? We just peaked below that one, but we had this. We hadn't really 9:30 hadn't happened. We hadn't traded back with any acceptance into 901. And then I'll mark the 8:45 candle. I think that is a great, just like kind of middle of the road. The 45s are interesting. We'll say that. We'll do another video on that in the future. But I'll mark that 8:45 candle high and low. Want to see how we interact with that as we move into the open. And then I'll look for trades around the high, the low of the 90-minute. I'll look for originating or adding or scaling into or from these key spots. And then I'll incorporate other spots that we hadn't traded to, right? Like this, I've already taken it off, but this was key. This was the afternoon range low, okay, from Friday. So we go over here, and we see this, like we didn't trade below that. We didn't trade below the afternoon range low. So why was I bidding up out of here today? Oh, we're not supposed to talk about execution yet. Sorry. Okay, so that's what I'll have coming into the day. I'll have euro range high low. I'll have so far in the day RTH 90-minute swings, 30-minute swings, prior days range highs, prior days range lows, and then we come into the market. What do I want to see? For me to be incredibly bullish, I want to see us hold above the euro range. I'd be looking for us to hold above and trade above the 30-minute swing high that created a low. So like this swing high or this swing high of the morning, kind of confirm that these sellers were offsides, right? And I'll look for continuation above the 90-minute swing high. If we're back inside of that, I'll use that as a target. If we're back inside of here, we got a rotation trade we can talk about in the future, but I've done trade reviews on it. So get back inside the euro range. We look to rotate to the bottom of it, taking profit at the mid or adding on a retest. And then it has to terminate here. If it doesn't terminate through this, then you got problems. It can do one of two things: trade down close to it, rebound, we trade back up to the mid, right? It can trade below it. It has, and this is where I'll do a video about market demands, but it has to hold reasonably within that. Meaning 1 minute candles need to be showing signs of selling. We need heavy sell delta that is productive and reoffered. And then we want to see continuation below. It's nothing magic, right? It's just not always overnight low. For me, it can be euro range low. That's more important than the true, like from the open at 1800 hours. That isn't as important to me as this range right here. It's also not as actionable for me personally. So I'll have a litany or a list in my mind, and I have written all this out, like from a trade plan standpoint in this book also, and in addition to levels and stuff, for the day. in the front of the book are like setups, like all the setups that I'll look for with regard to to ranges in time and how we have historically interacted. And then from that recipe book of entries, I will look at the ingredients that the market is giving me, and I'll see which recipe I can make from it. And so sometimes that's to be long after a peak below here, and sometimes that's to be long in a failure into here, and sometimes that's wait to short mid to go back down. And we can talk about a bunch of that in a future video. This one's already gotten pretty long-winded. Hopefully you found some of this helpful. That is everything I do to prep for a day. The only thing in addition to that that I'll look at is I will look at the dollar index just for reference, and then I will look at volatility. So I'll look at a VIX surface of some sort, right? And I'll be looking at that VIX surface through the same general lens. So the same type of time-based moves, which is what this would be to me, time-based liquidity and time-based rotations. I'll be looking at VIX through that same lens, and I'll be looking at the other markets. So I'll look at YM, I'll look at ES, I'll look at the bonds, I'll look at the ultras, I'll look at oil, CL, and I'll just, again, sometimes I'll be trading YM, sometimes I'll trade ES, sometimes I'll trade bonds, sometimes I'll trade CL, but most of the time I'll trade NQ because I'm most familiar with the nuanced movements of NQ. Once we get into what a day's like what do you do with a day, we'll talk about Delta, we'll talk about intraday volume profile stuff, things like that. But that's a prep rundown. That's everything I look at to build my case. The only other thing I can think of is in the same way that I look at daily candles, like a daily profile from a TPO standpoint, right? And I'll look for this like no overlapping value story, like we were talking about. Or we can look at the weekly real quick. So I'll look for that no overlapping value story, like this. There's also a setup on the 15-minute chart that's similar. Credit to Flary, probably other people. Well, let's say this is the first 15 minutes of the day, right? And let's say that during this day, we never traded back above this 15 minutes. And then let's say that we have a gap. So this day closed down here, and then we'll say we open back up here the next day. So Euro trades all that back. There is also a setup that puts me looking for bullish, similar to, if you watch the video, I talk about it, the other video on daily profiles, and why we were bullish on Friday. I talk about this setup, which is a 15-minute open and drive range gap. So we gap above a 15-minute sell candle that we never traded back above during the day that it was created. And then we look for this to test lower and then resume higher. So that'll get me looking to buy dips. All of that would have to fall in line. And this is what I think is different about some of what we do. It would have to also fall in line with this work. It would have to also line up. Like something here, because this is how I manage risk. So something here would have to also confirm that larger mode of work. All right, we've hit the 30-minute mark. Sorry, it was a little bit long-winded. A lot of information there. If you have any questions, drop them in a comment below. I'd be glad to answer them, right? Okay, we watch our comments, we try to answer, interact. Come over to the Discord. There's a link in the bio, I think. It's free. There's a free side of the server. All of our video content is free. It's all over there. You're welcome to jump all in it and learn whatever you want to learn, hang out, whatever. And every Friday we're free on the shop side. So come check it out. If this is interesting to you or you have questions, we can answer them there. You can send me a DM on Twitter. You can send me a DM on Discord. Be glad to have a conversation, offer whatever help I could offer. yeah, like there's plenty of people who aren't members of our room at all that I chat with regularly about trading and try to learn from each other. So, uh, yeah, have a good rest of your day or night, depending on when you watch this. And yeah, take it easy. Appreciate you.